Iceland raised its key interest rate today, increasing to 5.75% from 5.5%. It's the third increase since June. Now, this comes as the country prepares to exit capital controls that have been in place since 2008. Talking through this, I'm joined by Konrad Gudjonsson, macroeconomic analyst with Arion Bank. So, Konrad, Iceland's central bank raised its benchmark interest rate for a third time since June. Was today's increase to 5.75% an expected figure?
It was quite unexpected, I would say. We can see that just looking at the markets here in Iceland today. Bond yields have gone up sharply at the moment, they're up by 26 to 46 basis points, and the stock market is down on the other hand. So it seems like most market participants didn't expect them to raise interest rates today, mainly due to the fact that most recent inflationary numbers have been quite low. We are seeing the inflation still below target, largely thanks to appreciation of the krona, which is appreciated 3% against the euro since the end of August. And also oil prices are helping us as well. In the light of that, it was quite unexpected, I would say.
The central bank also said today in regards to interest rates that this does not change the need for a tighter monetary stance in the coming term in view of growing domestic inflationary pressures. Can you expand on what these pressures are?
The domestic inflationary pressures that the Monetary Committee talks about are, I think, twofold. It's first, very high wage increases from the recent bargaining round of up to 30% over the next 3 years. And that is, of course, far beyond the 2.5% inflation target and projected labor productivity growth. So they are understandably very afraid of that will cause inflation to rise quite rapidly in the coming months and coming quarters as well. It also stems from simply rising economic activity. We've seen very robust growth so far this year, and for instance, Arion Research, my department, we are projecting 5.4% economic growth this year and then over 4% next year. And we've already seen that the sort of output gap has been closing, and that might also cause inflationary pressures. So it's those two, the just rising economic activity, robust growth, and wage increases.
And of course, Iceland is trying to ensure that its planned exit from capital controls doesn't destabilize the economy, with eyes on the historically volatile krona. Is there an idea of how removing capital controls will impact the currency?
Well, it's very difficult to tell. The central bank and the central bank governor, Mr. Gudjonsson, have been very, very clear on that they will not lift the capital controls and let the exchange rate take large shocks. They will do it sort of in an orderly fashion. They've been very clear on that, and I think most market participants they believe that they can sort of maintain a relatively stable exchange rate over the coming months. However, it's going to be really difficult to tell which way it will go. It depends a lot on just foreign trade. And they have also said that they might want to smooth out fluctuations in the exchange rate, but they're not on an exchange rate target. Easing the capital controls, the main challenge there is how to unwind the falling states banks that collapsed in 2008. And that process seems to be going quite well judging by the most recent developments. And that's their main concern, looking at that, how unwinding the failed states banks, because they are so disproportionately large relative to the Icelandic economy. So it's a huge task, and it will be really interesting to see how that will all work out. But judging by what they released last week, the ministry and the central bank, with the updated stability conditions that they have permitted them to unwind those failed estates, it seems like it would not affect the exchange rate or the balance of payments of the country in a significant way.
That was Konrad Gudjonsson. Join me there. Now, for more market analysis and insight, you don't need to go too far. There's plenty more right here on Dukaskopi TV.